Hello, everyone. Today I'm sharing something slightly different. I'm examining Social Security categorized by age category. What typical Americans in each category are presently collecting in 2026. What they'll collect after the upcoming COLA modification, and the one particular thing each category most frequently misses that could boost actual dollars in their benefit. Locate your age, continue through your segment, and when completed, you'll know exactly where you stand and which actions make sense. Before we start, if you're 60 or above, presently retired or nearing retirement, and you've ever questioned whether the Social Security and Medicare system was built to intentionally confuse you, I've created something especially for you. It's named the American Retirees Money Playbook. Every regulation, every document, every contact number, all confirmed against 2026 government information and presented in plain language. Individuals who've reviewed it have identified Medicare billing mistakes, discovered Social Security funds they were entitled previously, and removed taxes on benefits they were never meant to be paying. If any of this speaks to you, the link is in the description and the pinned comment. Scan the QR code if you're viewing on a screen. Now, let's dive into it. Let's start with the youngest category collecting Social Security, ages 60 to 64. Based on SSA information, the average benefit for a retired individual who claimed at 62 is $1,377 monthly. At 63, $1,392. At 64, $1,447. These aren't maximum amounts. These show what average individuals in each category are presently collecting, showing the permanent early claiming reduction with the expected 3.7 to 3.8% COLA for 2027. Someone collecting $1,377 receives approximately $51 monthly next January. Someone collecting $1,447 receives around $53. The important point for this category, if you claimed within the last 12 months and are feeling regret, Form SSA 521, the application for withdrawal of application, permits you to reverse your claiming choice, repay all money received, and claim again afterward as though you never applied. One chance only, within a 12-month period from your first payment. For someone who claimed at 62 with a full retirement age of 67, the permanent reduction is 30%. That's $600 less monthly on a $2,000 benefit. The form is valid. The option is available. Most individuals learn about it after the period has already ended. Now, ages 65 to 69. This is the category with the largest spread in benefits, and that spread communicates a clear message about claiming choices. SSA information shows the average benefit at 65 is $1,612 monthly. At 66, it's $1,890. At 67, which is now the full retirement age for everyone born in 1960 or later, it's $1,963. At 68, $2,040. At 69, $2,520. The gap between the average benefit at 65 and the average benefit at 69 is $440 monthly, $5,280 each year, and that gap is permanent. With the expected 3.7 to 3.8% COLA for 2027, someone at the 65 average of $1,612 receives approximately $60 monthly. Someone at the 69 average of $2,520 receives roughly $76. The bigger your base amount, the more every COLA adds in actual dollars, which is one of the strong reasons to wait. Nearly 14% of retirees aged 65 to 69 rely on their Social Security benefits for 90% or more of their household income. For people in this category who are heavily reliant on Social Security, there are two particular checks worth doing right now. First, if you or your spouse ever worked in a government job that paid into a pension rather than Social Security, call SSA at 1-800-772-1213 and ask particularly whether your account has been fully updated under the Social Security Fairness Act signed in January 2025. The WEP and GPO rules that were removed by that act lowered benefits for millions of teachers, firefighters, and government workers. And back payments averaging $6,710 are still being handled for married and survivor cases as of mid-2026. If your benefit didn't rise after January 2025 and a government pension shows in your record, your back payment may still be pending. Second, if you're between 65 and 69 and haven't yet claimed, you're still in the delaying and growing phase. Every month you delay past your full retirement age adds 2/3% to your permanent benefit, totaling roughly 8% each year between full retirement age and 70. On a $2,000 FRA benefit, delaying one additional year to claim adds roughly $160 monthly permanently, now ages 70 to 74. The average Social Security benefit issued to retired people at age 70 was $2,188 monthly as of June 2025. Using the 2026 COLA of 2.5%, the present 2026 average for 70-year-olds is approximately $2,243 monthly. With the expected 3.7 to 3.8% COLA for 2027, someone at that average would see their benefit grow to approximately $2,326 monthly starting January 2027, a gain of about $83 monthly. The maximum possible Social Security benefit in 2026 for someone who earned at the maximum taxable income and delayed to claim until 70 is $4,873 monthly. That is the cap. Most individuals are well below it, but recognizing the gap between the average and the maximum shows how significantly claiming choices and earnings histories can influence lifetime benefits. For retirees 70 to 74, 16.7% rely on Social Security for 90% or more of their household income. For this category, two particular matters appear most often. First, the Medicare Part B premium is $229.00 monthly in 2026, withdrawn automatically before the benefit comes. If your income in 2024 was raised by a one-time occurrence, selling a property, taking a large IRA amount, Medicare may be adding an IRMAA fee on top of that base amount ranging from $74 to $444 per individual monthly. If your income has since dropped to normal levels, Form SSA 44 filed with Social Security can start a reassessment using your present income. Call 1-800-772-1213 and say, "My income fell significantly since 2024 and I want to file Form SSA 44. Second, if you're in this age category and haven't yet checked your Medicare Advantage plan's pharmacy benefit for the third quarter, the seasonal credit reset on July 1st and ends September 30th. Credits range from $150 to $525 based on the plan. Call the customer service number on the back of your Medicare card and ask what your present third quarter credit is. Now ages 75 to 79. This category's Social Security benefit shows many years of COLA raises applied to whatever benefit they initially received, meaning the real figure changes considerably based on when they claimed and what their earnings history looked like. The present average for people in this range sits roughly between $2,050 and $2,150 after 2026 changes. The matter that affects this category hardest in 2026 is what financial advisors call the Medicare widow impact, and it surprises surviving spouses completely off guard. When both spouses are alive and filing jointly, their combined income is evaluated against the joint IRMAA limit, which starts at $218,000. When one spouse dies, the widow is now a single filer, evaluated against the single filer limit of $109,000, approximately half as large. If the widow's income is $150,000, the same money previously coming from two people now coming from one, they may have moved into an IRMAA fee bracket for the first time in their lives. Their Medicare Part B premium can rise from $229.00 to $458.00 monthly or higher based entirely on a filing status shift rather than an actual income shift. If you've been widowed and your Medicare premium recently grew substantially, Form SSA 44 handles this directly. The death of a spouse counts as a life-changing event. Filing the form starts a reassessment using your present income rather than the year Medicare is using. Reach out to SSA and ask about it. For property owners in this age category, tax freezes that secure your property's assessed value are offered in many states and can save $24,000 to $96,000 over 20 years of retirement. If you haven't requested a senior property tax freeze in your state, the application cutoff in most regions falls between August and October. Now, the oldest category, ages 80 and older. For those 80 and older, 26.9% rely on Social Security benefits for 90% or more of their household income, the highest reliance rate of any age category. The present average for people 80 and older falls roughly between $2,000 and $2,100, with the expected 3.7 to 3.8% COLA for 2027, someone at $2,050 receives approximately $76 monthly starting in January. Three matters appear most often for this category. First, required minimum withdrawals. Anyone 73 or older must take annual amounts from tax-deferred accounts. Missing an RMD creates a 25% penalty reducible to 10% if fixed promptly with Form 5329 and a reasonable cause explanation. Second, beneficiary selections at 80 and older. The chance that POD and TOD selections on checking accounts, IRAs, and insurance policies are old is significant. And missing or old selection sends those assets through probate, 12 to 24 months, and substantial legal costs. Updating selections takes roughly 10 minutes per account. Third, fraud safety. The FBI recorded average losses of approximately $38,500 per victim among people 60 and older in 2025, focused heavily in the oldest age categories. A trusted contact selection on every financial account is the single most powerful protection. The bank reaches that individual before freezing your account over a questionable transaction. 10 minutes to establish. So here's the full summary by age category. Ages 60 to 64. Averages going from $1,377 to $1,447 monthly. If you claimed within the past 12 months and have doubts, Form SSA 521 gives you one chance to withdraw and claim again. Ages 65 to 69, averages going from $1,612 to $2,520. Check whether a WEP or GPO back payment under the Social Security Fairness Act remains pending on your record. Ages 70 to 74, average approximately $2,243 in 2026. Verify for IRMAA fees using Form SSA 44. If your income fell since 2024 and use your Medicare Advantage pharmacy benefit before September 30th, ages 75 to 79, the Medicare Widow Impact can double your Part B premium after a spouse's death, and Form SSA 44 handles it directly. Ages 80 and older, averages between $2,000 and $2,100. Verify RMDs are being taken. Update beneficiary selections, and add a trusted contact to every financial account. With the expected 3.7 to 3.8% COLA for 2027, every category will see a meaningful rise in January. But for most individuals, the biggest opportunity isn't watching the COLA. It's confirming the base benefit is as correct and as large as it should be right now. subscribe, share this with someone you know who collects Social Security, and I'll see you in the next one.